The Japanese rice traders say, let the market tell you what the market is doing. In the current analysis of the trend in the Dow, we can see that it moves up, has profit taking, supports on a support level, moves up, has profit taking, moves up, has profit taking, and starts moving back up again. The probabilities right now that the market is starting to move back up and getting ready to go into the next uptrend looks pretty clear. And that assessment should be kept in place until something dramatically changes the current pattern of the market. Friday's trading action in the NASDAQ showed a very strong bullish harami, which told us the selling should have stopped. With that action going on, with the NASDAQ up strong, forming a strong bullish harami, and the Dow forming a doji, it becomes a common sense analysis using candlestick signals that investor sentiment might be changing. Today, the NASDAQ closed above the T-line. It opened positive, confirming the bullish harami, which now tells us we're probably back in an uptrend with stochastics curling back up. In this case, it allows the candlestick investor to keep in positions or get into positions that have high probability results ready to occur. For example, recommendation on buying NIHD, because we had a J-hook pattern. J-hook pattern is a strong price move, a pullback that's indecisive, and then the move continues back up, breaking through this level. On Friday, we had kind of a little doji type day after a strong bullish day prior to that. Makes this a very simple trade. We know the simple rule of a doji is that if it opens positive, more than likely it's going to trade positive for the day. And if it does trade positive, it creates what we call a doji sandwich, with a bullish day, a doji, and then another bullish day. And that gives us pieces of information that adds to our assessment that this resistance level has been broken. Now we're going to be in wave 3, and we're probably in wave 3 because we have a doji sandwich, which usually results in further trading to the upside. Being able to use patterns to identify what's going on in investor sentiment puts the candlestick investor in situations where the probabilities of being in a high profit trade are extremely strong. As we can see, there's a slow rounding bottom, fry pan bottom, that broke out through this resistance level. Tells us there's going to be a very strong uptrend. We also know that the makeup of a J-hook pattern is a very strong uptrend, followed by some indecisive trading on the pullback. Notice the stochastics do not come back to the oversold area. And now we're starting back up, telling us if we, after this kind of a doji day, after a big bullish day, if it opens positive, it's probably going to do a doji sandwich, a big trading day like this, which also tells us that this level of resistance is not going to act as resistance anymore. That we're now probably in wave 3, which means our next wave could be about the same magnitude as this wave right here. This is just common sense put into graphic depictions, utilizing the information that Japanese rice traders have illustrated for us over the last 400 years. That'll be it. We'll see you in the chat rooms.